You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 11th day of August, 2022. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts each and every day. The first one is reserved for members only and those taking their 1-week free trial. If you've not taken your 1-week free trial yet, in just a few minutes, Michael will show you exactly how to do that. Now, during your free trial, which is 5 consecutive trading days, so you can start any day of the week, you don't have to wait for a Monday. You get 5 consecutive days where we treat you just like a lifetime member. We give you access to all the tools, all the information, to the discussion group, everything. We do this without any credit card required because we want you to have an opportunity to see what it's like to have a real teacher every day, 2 hours a day, putting on, taking off trades live in real time, explaining every move they make, every trade they take, and the rule behind it, while you trade along in the simulator and ask questions. It's an interactive environment. It is by far the best way to learn how to trade. At the end of the 5 days, you'll be able to make a well-informed, intelligent decision whether or not what we do is right for you. Now, our second live broadcast each day is open to the public. That's everybody, everywhere. There's 2 different ways to join the afternoon broadcast, whether you're a member or not. If you point your browser to mytradingiq.com, eminitrainingschool.com, cfrn.net, you'll see a link for the afternoon broadcast. Click that link. There's a 30-second registration form. Once you complete that form, every trading day going forward, you'll receive an email right before the broadcast starts. In that email is a link. When you're ready to join the show, all you have to do is click the link and it will automatically log you in. Now, the reason I say that's the better way is because it gives you access to the question box, so you can ask questions and participate in the discussion. The other way to join the afternoon broadcast, all you need is an internet-connected device. Point your browser to youtube.com/CFRN. Easy to remember, youtube.com/CFRN. Not only do we simulcast the afternoon broadcast, both from our site and on YouTube. On the YouTube channel, we archive each and every daily show. Currently, there are over 2,000 daily live broadcasts archived for your educational and viewing pleasure. And while you're there on the YouTube channel, be sure to click the subscribe button and the little bell. This way, anytime we go live, you'll be notified. Let's open with a word of prayer. Our scripture is Isaiah 28:16. So this is what the sovereign Lord says. See, I lay a stone in Zion, a tested stone, a precious cornerstone for a sure foundation. The one who relies on it will never be stricken with panic. Again, that's Isaiah 28:16. Jesus said these words in the New Testament that are still so true and powerful today. This is John 16:33. I have said these things to you, that in me you may have peace. In the world you will have tribulation, but take heart, I have overcome the world. You know as well as I do, if you turn on the news, scroll through social media, everything you see and hear absolutely confirms Jesus' words. Tribulation, hunger, wars, illness, family struggles, and so much more. The list is really endless. Sadly, we often spend too much of our days worried, anxious, stressed, and ultimately worn out from all the things happening around us. The good news, Jesus has already overcome the world. He has come to bring you peace in the midst of the storm. Look to him, seek him in prayer, and through studying his precious words in the Bible, then we spend more time with the Lord, the more that we will find ourselves trusting him more and more, moment by moment and day by day, as we pursue him. We will find that our anxiety lessens while our peace increases and our relationship with him grows richer. Don't allow one more day of peace and joy to be stolen from you. Pray with me. Heavenly Father, thank you for the promises that you give us in your word. Thank you for saying that I can have peace in my heart. Thank you that I can walk away from anxiety. Help me to keep my eyes on you in the midst of all my difficulties. Help me to trust you more each day. Thank you that you are my cornerstone, that as I lean on you and believe your promises, I can be strong in my faith. You are my God, and I will learn to rest on you today. Draw me close to you as I walk through all of these situations the world offers. In Jesus' name we pray. Amen. And everybody said amen. Well, happy Thursday. As you know, Thursday night is Partners Workshop, 9 p.m. Eastern, every Thursday night, reaching back to 2008. So members, have your questions ready, and those who have been on your 1-week free trial, if you want to be in the members-only workshop tonight, make sure you visit eminifuturestrading.com to get your lifetime passport. And if you have any questions, call Valerie at 949-42-EMINI or send an email to support@cfrn.net. Let me give you the numbers from around the world. We're going to start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is up 141 points. Now, we're well off the high of the session, and when we go to the charts a little bit later, I'll show you exactly why. In fact, we talked about it yesterday. We've been talking about it for a number of days. The NASDAQ is down 7.5 points. S&P 500 up 13, and the Russell 2000 up 12. In the commodity basket, crude oil up $1.79, trading 93.74 last. That's a gain of almost 2%. Gold, on the other hand, down $7.80, trading 18.0590 last. And silver down 41 cents, trading 20.33 last. That's a drop of almost 2%. In the Asian markets at the close, the Nikkei posted a loss of 180 points. The Shanghai rose 51. The Hang Seng gained 471. Now for the Shanghai, that's a gain of 1.5%. For the Hang Seng, it's a gain of 2.5%. In the European markets at the close, FTSE down 41, DAX down 6, the CAC up 21. So it was a mixed day in Asia, a mixed day in the UK, and so far it's a mixed radio Thursday here in the US of A as the NASDAQ continues to slide into the red. Again, we're well off the highs of the day. And when we get to the daily chart just a little bit later here during the broadcast, it'll be obvious to you why that is the case. So Michael, if you're ready, you can take it away. I think that's the sound of Michael not quite ready yet. Okay. Then we'll go ahead and jump to the daily chart. And there's your answer right there, the 62% reverse fib. We finally made it out of the box last night. Okay. These are reverse fibs because we've been in a downtrend. If we can overcome this 62% reverse fib and hold a pullback, we'll take down the reverse fibs and we'll go to regular fibs where we draw from the low to the high, as opposed to when we're in a downtrend, we draw from the high to the low. And I think I just heard the sound of Michael showing up.
That is me.
If you're ready, you can go ahead and take it away.
Okay. Let me grab everything, bring it over here.
And once Michael is finished, I'll be back. We'll take a look at each one of the individual markets that we cover. And at any point during the broadcast, if you have a question, all you got to do is put it in the question box and we'll be happy to answer it for you. Okay, I can see your screens. Let me hit mute on my end. And
all right,
it's all yours.
Here we go. Good afternoon, everyone. Today is Thursday, the 11th day of August, 2022. Now, excuse me. If you want to take a free trial with us and you haven't taken a free trial with us, go here to mytradingiq.com. You can click any one of these places to do this, to just log right in and sign up for the free trial. You can go all the way down to the bottom here. Give us your first name, your phone number, and your email. Tell us your trading, what's going on with your trading, so we can get ready for the one-on-one meeting with you. Okay, now we really do these one-on-one meetings. We want to get your desktop set up. Whenever you're on the trial, we want to get your desktop set up so you get the most out of the trial. All right, hit the send request, and you're going to be sent a confirmation link. You must click on the confirmation link. Okay, we don't know you. We don't know you took the trial until you click that confirmation link. This one right here, if you go through this, you're going to go straight to go to webinar. Okay, and you just sign in right there, and you'll be sent all the information you need to get into the training. All right, now the spreadsheet. Again, we did some more training this morning, so we didn't do as much trading as we normally do. We did, we still get 20 trades off, and so it was still good enough. We did get our goal for the day, but we started out with 3 stop outs. I'll get into all that in just a second. Again, if you're going to read this, you got to read all the CFTC risk disclosures down at the bottom. Today's the 11th day of August, 2022. We made 50 ticks in crude. We lost 14 in gold, and we made 5 on the ES. That put us at 422.5 on the morning session. Today it took 40 minutes and 13 trades to get to the goal for the day. At that point, we're up 155, and that's because we stopped out on our first 3 trades. And I'll show you all those in a minute. And we took a total of 20 trades this morning. So on the month now, we're at $5,975 a contract. That's over 9 trading days, averaging $663 per contract per 2-hour trading day. We've now gone 152 days so far this year getting our goal. That happens to be every single day so far this year that we traded. And we've gone 213 days since our last negative day. All right, so now on the year, we're at $158,953 a contract. So over 152 days, averaging $1,045 per contract per 2-hour trading day. We've never gone this far into the year averaging over $1,000 a contract. So if you're not trading futures right now, guys, I don't know why not, and now's the time to get into it. All right. If you were to quit trading when you got your goal for the day, and your goal was $100 a contract, and you did it just like I did, then, and you added 1 contract per month, then you would have only had to work 25.5 hours so far this year, and you would have averaged $3,503 per hour on the year. Okay. All right. Let's get into what happened. Wow, look at that crude oil go. Let's get into what happened here. We'll start out with the gold. Okay. We started out in here with gold. Our first trade, we had a break even. Then that one we missed. This one we had, it ended up stopping us out. We were minus 10 right there. It stopped us out pretty much to the tick and then ran up 22 ticks. The next one stopped us out, and that one really did stop us out. It kept going down. So at that point, we were minus 20 on gold. We had our moment in time right here, and it did pretty much what I thought it was going to do. Gold was the only one that I thought was going to give us a trade setup coming out of the moment in time, and price was at 11.9 at the time. And I thought I was hoping for a down close of the current bar that was happening in there because it was going to spread out the ribbon. But I didn't get a down close on that one. We got an up close on that bar and a down close on the next bar. The next bar spread out the ribbon and still gave you a trade setup. It did go down like I thought, pulled back up. Didn't give you an immediate trade right there, but it did. But it did work out. Okay. As it continued, there were 2 more trades in here. They're both trend line trades. 1 more back here, a little further along, and then that was pretty much it. Okay. That was pretty much it for the morning. We really haven't had anything else since then. We might have a trade coming up right here if we get an up close on this bar, but actually, you know what? My charts are shut off. I logged on another computer during the break. Let me turn it back on, and then we'll see. We'll see what happened now when it comes back on. All right, so this is where I was looking a minute ago. No, this is where I was looking a minute ago. Okay, so nothing much has happened since then, unless it's not completely up yet. It doesn't look like it is. I don't know. Anyway, the next one, crude oil. Yeah, I guess this is completely up. Okay, so we really didn't have another trade set up. We probably have one right here, and right now it should go up to 7.6. Right now is what it's looking like it should go up to right here. Okay, 7.6. All right, so crude oil. We'll jump into crude, and you know we were minus 20 at that point on the gold, and we got it all back here on crude in a couple of trades. Now, the way the crude worked out here right at the very beginning, I didn't end up getting into these trades. I don't know why, but I didn't end up getting into these trades. Oh, I know why, because they weren't actual trades. It was just giving us the numbers, but it never pulled back deep enough to give the trade. It finally did right here, but I missed it. Then there was one here. I got to break even. Then I started picking up some profit here. The first trade was plus 11. The next trade was plus 15. And the next trade was plus 4. So that got us from 11 to 26 to 30. Okay, then we had to break even. Then we got 8 more there, got us to 38. And then we had the moment in time. Crude oil wasn't really giving any information during the moment of time. I just thought it was going to go down. It did eventually go down. The next trade we took in here was, looks like 12 ticks right here. Got us from 38 to 50. And that was where we ended it with crude. Now, right here, I had taken a walk and went through all this right here while I was taking a walk. And that was it. We didn't have any more trades that we took. So I'll just highlight during the break if we had any, and we didn't have any trades that were off the BBC with the right color. Just about right in here. Just about, but not quite. It wasn't spread out. I guess right here, there was one that was good for about 7 ticks, 7 or 8 ticks. In here, there was a chance to go long right there. Oh, I was just going to do the bounces. Okay. And that was it for that. All right, now the ES. Here is the ES. Now it started out in here. It was showing a few numbers here and there, but it didn't give a trade setup until right here. Finally gave a trade setup here, and we picked up 4 ticks on that one. Then we stopped out here. Now at this point, we're minus 20 on gold, and we're minus 6 on the ES. Right, so we had to come back from all that. The 2 crude trades, or the 3 crude trades, that really give us 30 ticks in crude helped out in that regard. But we had a break even there. That was all the color right there off the BBC. Then we had a trend line trade here that got us from minus 6 to minus 2. We had a break even trade in there, went from minus 2 to plus 2 here. So that was a plus 4. We had a break even. Then we had a minus 10 right there that got us back down to minus 8. We had a plus 3 right in there that got us to minus 5. And then right at the end of the session this morning, we had a plus 10 right there. That got us to plus 5 on the ES. Now, during the break, only the right color, ribbon, and bar. I am 1 right here, 1 right here. So we had 2 of them where the ribbon was spread, and you could have just taken the bounce off the BBC. The 2 of them, and both of them worked out for at least 10 ticks. And that was it for the morning session. Now let me see who all is in here right now. All right. What I wanted to say for everybody who's in here who doesn't know, I'm going to jump to it right now. Well, first let me do the spreadsheet, and I'll go back to the other thing. Okay. Now, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 11th day of August, 2022. We made 50 ticks in crude. We lost 14 in gold. We made 5 on the ES. Put us at 422.5 on the morning session. Today it took 40 minutes and, I'm sorry, we made 40 ticks. I'm sorry, no, 40 minutes and 13 trades to get to the goal for the day. At that point, we're up 155 per contract, and we took a total of 20 trades this morning. So on the month now, we're at $5,975. That's over 9 trading days, averaging $663 per contract per 2-hour trading day. On the year now, we've gotten our goal in 152 out of 152 possible days, and we've gone 213 days since our last negative day. That puts us at $158,953 per contract. This is on the month. This is on the year. Okay. So this is our daily average on the year. This is our daily average on the month, right? So on the year, we're at $1,045 per day average. We're dropping a little below that right now. We got to get this cranking again here. You can see our averages are well below $1,000 on the month, but we'll get that going again. I really want to have it over $1,000 by the end of this week, but we had an open house, and so I'm doing a lot more training. Anyway, if you were to quit trading when you got your goal for the day, and your goal was only $100 a contract, and you were to add 1 contract per month, you now would have only had to work 25.53 hours so far this year, and you would have averaged $3,503 per contract $3,503 per hour, not per contract, per hour. Okay. All right. So the other thing I was going to show you, I was going to go back here to my trading IQ. Now, if you haven't looked at everything here on my trading IQ, if you haven't looked at this lately, right, this is fairly new. So go to mytradingiq.com. It's got a whole bunch of information about where we currently are. All right. If you go to the videos, it's got the 7-tick range videos in here, 7-tick range setup, the rules, all that stuff. If you go to the handout, these are the steps, the 2 steps for the 7-tick range. All right, you can download that. It's got the handout. If you go to platforms right here, in here, everything is really laid out really well in here, probably better than we've ever had it laid out. And the installation is really simple. DT Pro, TradingView, and Ninja. Okay, they're all very simple. There's videos for every one of them. If you need to download your platform or upgrade your platform or update your platform, just go here to platforms, right? It's mytradingiq.com. It's really well laid out website and really simple to get to every piece of it. All right. And that is it, guys. With that, I can pass it back out to fabulous Phoenix, Arizona. Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready.
There it is. I can almost see it. Now I can.
Alrighty. Recap of the recap.
And today, 40 minutes, 13 trades, $155 a contract.
Good job.
Thank you.
Okay, guys, that's what happened the first 2 hours of the Wall Street Open. 9:30 a.m. to 11:30 a.m. Eastern. That's our live training room each and every day, where you have a live instructor putting on, taking off trades, live in real time, while you trade along in the simulator and ask lots of questions. People always want to know, how long is it going to take me to learn this strategy? It's a very simple strategy, built on some very core principles that have not changed since 2008. The more questions you ask, the sooner you'll learn. Because it's such a simple strategy, well, there's only so many questions that you can ask. So when you're on the trial, don't ever feel like your question is an interruption of what's going on. Your question is the purpose that the room even exists. As a passport holder, you have lifetime access to the live training room, unlimited one-on-one mentoring, the methodology that we teach you, the strategy, the indicators that you own for life. Those are fluid across all markets and all time frames. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. So our strategy, it's not designed to beat the market. We consider the market our business partner, and so we don't want to beat our partner and end up on dayline. No, we simply want to understand what the market at large is attempting to do. It's the institutional money that moves the markets. And so, if the institutional traders, the Goldman Sachs of the world, hedge funds, etc., okay, it's their trades that move price. If they're trading long, then we simply want to be able to see that and ride their coattails long enough to reach our goal for the day. If they're shorting the market, again, we just want to ride their coattails long enough to get our goal for the day and then put the mouse away. You don't want to spend your whole life staring at charts. It's not necessary. Okay? In the beginning, it's all very exciting and interesting, and you want to learn as much as you can. There's more out there than you can learn. Okay? So you only need to learn enough to reach your goal for the day and grow your account size over time. So to help you in that endeavor, along with the live training room each day, we have 2 separate alert services that are included with the passport. Logic 247, that's our 24/7 around-the-clock Emini alert service. It's not just the E-minis, it also includes crude, gold, silver, the euro, and bonds. We're approaching alert number 11,500 over the past 210 weeks. This has been a light week due to market conditions. You'll see that on the daily chart when we go to it in just a moment. We've issued a total of 26 alerts since Sunday night at 6 p.m. Eastern. The Globex markets don't open Monday morning at 9:30 a.m. Eastern like the stock market. They open Sunday night at 6 p.m. Eastern. And so the Logic 247 alert channel opens for business Sunday night at 6 p.m. Eastern, remains open around the clock till Friday afternoon at 5 p.m. Eastern. The Logic alerts are based on current price action. Of the 26 alerts issued this week, a typical week, you'll see between 50 and 100 alerts issued. So far this week, there's just been 26. 4 never triggered. We're all caught up. We've had 22 actionable alerts, of which 4 or 18% would have been stopped out based on not risking more than $300 per contract, per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our passport holders. Over the last 210 weeks, we've averaged 20% of actionable alerts being stopped out. Now, when you look at the charts, even when an alert stops out, you'll quite often find that when it triggers the second time, it runs not only to the target but beyond. Once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. And you'll see that as we go to the charts. Okay, that's logic 247. Our original alert service, the concierge trade alerts, those are a little bit different. Different how? I'll show you and I'll explain to you. As opposed to coming out around the clock whenever opportunity presents itself, the CTAs are published as a static report shortly after the Globex open each evening. They provide forward guidance for the entire session. Now, most people won't be trading all of these markets, but whatever market you do trade, once this report is published, you should make note of where price is at that moment in time. Because going forward, if price starts trending up towards 42.26, that's bullish. So our strategy will be looking for opportunities to be long the market. If price starts trending down towards 41.78, that's bearish. Our strategy will look for opportunities to be short the market. In either case, there will be opportunities most days to reach your goal for the day before you even hit the trigger. Okay. Now, for the market that you do trade, whether it's the S&P, the Dow, the Russell, crude, NQ, gold, silver, the euro, bonds, or a variety, when this report gets published, you should go to the 30-minute chart of that market, draw a line in the sand at 42.26, draw a line in the sand at 41.78. So visually, you're able to see which direction price is trending. And you'll use the BBC. If price is above the BBC, then you know you're trending up. If price is below the BBC, you're trending down. In either case, you're going to use Logic 247 and everything you learn in the live training room every single day to yourself find opportunities to be long or short the market. Our goal is not to keep you tethered to us forever. Although the passport gives you lifetime membership, we want you to remain a part of the family, but we also want you to become self-sufficient. We want you to learn to be able to read a chart just like you'd read a newspaper or a mystery novel. And we don't want you to be dependent upon anybody to tell you when to get in or when to get out. Again, price flows from support to resistance, back to support over and over. It's a never-ending cycle. Our indicators provide you with dynamic support and resistance, while our weekly trading zones, which we've published since December 14th of 2009, are your fixed support resistance for the entire week. Once the zones are published Monday morning at 6:15 a.m. Eastern for our members and those on the free trial, they are carved in stone for the entire week, just like the CTA numbers are carved in stone for the entire session. Now, the Thursday session began last night at 6 p.m. Eastern. It will end this afternoon at 5 p.m. Eastern. The Friday session, there's an hour break, and then the Friday session will begin tonight at 6 p.m. Eastern, even though it's still Thursday night here in the U.S. So if you want to grab a screenshot of these, feel free to do so, because we're going to walk through, we're going to look at the daily chart first, and then we're going to walk through each one of these individual markets. Okay? All right. Now, we already took a look at the daily chart. We're going to look at it again one more time. The most recent important high on the daily chart, March 29th, we put in a high at 46.30. On June 17th, we put in a low at 36.39. We worked our way back up to this area that we knew and talked about. Now, there's over 2,000 daily live broadcasts, just like this one, archived on our YouTube channel, youtube.com/CFRN. So if you're new to CFRN, you can go and scroll back 6 weeks, 6 months, a couple of years. You'll find us using the same language, the same underlying principles. Nothing changes because our strategy is built upon the core principle of how markets operate. Those core principles, those underlying principles, have been in existence since the inception of the markets, and they will remain in place until the markets cease to exist. One of the issues with so many different strategies is that they work in some types of markets, but other types of markets they don't work. Our strategy is the same. Because you're going to have different types of days, up days, down days, slow days, busy days in the markets, you have to become, as a trader, the constant integer in the equation. And sadly, one of the big mistakes that many traders make, would-be traders make, is that along with not having a live teacher every day and unlimited one-on-one personal mentoring, is they don't have a business plan, they don't have a trading plan. The barrier to entry with trading is very low, especially in the futures market. And so that leads many people to believe, well, with $3,000 I can fund an account, I'll watch a couple YouTube videos, and then, I'll spend my afternoons over at the Lambo showroom picking out my next new car. Well, at this point you've learned it's not quite that simple. Okay? Any career path that you take, you need somebody to teach you how to do the job. Whether it's a plumber, an electrician, an airline pilot, or a brain surgeon, a barista, whatever. Any career path requires training and education. Now, many traders will buy a book or watch a video series, but, well, you know where that's taken you. As long as you continue to do the same thing, you will continue to end up in the same place. Now, we're not against books. Trading in the Zone, all of our passport holders get a legal free copy of Trading in the Zone. And we've got thousands of videos ourselves. But neither of those replace having a live teacher every day and a one-on-one mentor. Okay? And that's something very unique that we offer that you probably won't find anywhere else. In fact, our lifetime membership is actually less than what some self-proclaimed gurus will charge you for an hour of their time. I don't doubt you might not learn something of value during that hour of time, but a day later, 2 days later, when you have a question, well, you're going to have to cut another check. We decided long ago, when Michael and I first met, to build something different, something that's family friendly, something that's not smoke and mirrors, parlor tricks, circus acts, but to help people actually understand how markets work and build on that core principle to create your own trading business. Again, these are reverse fibs. We struggled in this area at the 50% reverse fib, which did not become the 50% reverse fib until this low was put in. But what price was doing is it was consolidating for about 7 trading sessions right above the BBC. Now the green line stands for, BBC stands for bull bear cross. When price closes above it, we anticipate higher prices. When price closes below it, we anticipate lower prices. The other indicator, the CFMA1, I simply refer to as blue and climbing, red and falling. One bullish, the other bearish. When red and falling is below the BBC, looking for short opportunities. When blue and climbing is above the BBC, we're looking for long opportunities. Okay? Trading's not easy, but it can be that simple. Now, everything I just explained is not applicable just to the S&P E-mini futures daily chart. Everything we teach and the indicators we provide are fluid across all markets and all time frames. And I don't just mean the futures markets. I mean stocks, I mean crypto, I mean Forex. The underlying principle is the same no matter what market you're trading or what time frame you're trading. But the clock on the wall is always price. We knew we would have difficulty getting through this area. This rectangle was drawn quite some time ago. True to form, we got into this sticky area. Some less than stellar economic news. In fact, our current president said last night that based on yesterday's economic reports, we have zero inflation. It's still the highest in 40 years, but we have zero inflation because we were a little bit lower in July than we were in June. We're still at 40-year highs, but somehow that translated into zero inflation. Now, I think the markets got excited because they think Jerome will ease up on raising interest rates. The fact that for 1 month, one 30-day period out of 40 years, we saw a small drop in inflation is going to encourage Jerome to perhaps even double down, because the board may see that, well, it's working. We were at 9.1%, now we're at 8 and change. Okay, the target interest rate is 2%. And if they believe hiking rates is what's going to take us back to 2%, well, for those of you that were around in the 70s, when home mortgages ran 18%, if you had good credit, think about it. We've been at near zero for the Fed funds rate for quite a few years. And the thought of where this current Fed and current administration could take it, well, everybody's got to make their own decisions and their own plans. We're going to trade what's in front of us on any given day. The reason we look at a daily chart first is because that shows us what the institutional money is doing. They look at daily charts, weekly charts, and monthly charts the way we look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? Well, they have much deeper pockets. They can handle much more of a drawdown than you or I, and that they can comfortably stay in a trade far longer than you and I might. You know, for many traders, get a little green on the screen, take it. Okay, And in the beginning, really, there's nothing wrong with that, okay? 2 points a day out of the S&P is $100 per contract. When you start trading with us, we want you to start in the simulator. No matter how much time and treasure you've spent learning how to trade, you've obviously ended up at our doorstep because whatever you were doing wasn't working, okay? And so you start out in sim. As a passport holder, you'll get the 2420 blueprint, which is designed to help you go from 1 to 20 contracts over a period of 24 months. You start in sim till you put together 10 consecutive days in a row. Once you do that, the blueprint will give you the green light to go live with one contract. Once you go live, your goal is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. Now, the biggest difference between the first and second contract is the first contract is funded with your startup capital, whereas the second contract is funded with profit you earned in the market. The blueprint will notify you when it's time to add contract number 3, number 4, number 5, number 10, and so on. But you only add when the blueprint tells you it's time, and you only add one at a time, and you only add with profit you earned in the market. That's the way to build a successful trading business. Not by just continually wiring more money to Chicago, but to actually earn money with one contract till you can afford to trade 2, and then earn enough money with 2 till you can afford to trade 3. Now, those 2 points I mentioned in the S&P, which pay $100 per contract, by the time you've earned your way up to trading 10 contracts, the same 2 points is now $1,000 a day. And that right there puts you in the top 3% of wage earners worldwide. And that's just a function of math. But the key is you've got to learn to be consistent. Can you consistently take a couple points a day out of whatever market you're trading, or the equivalent of $100? Like gold, it would be 10 ticks. Crude, it would be 10 ticks. 2 points in the S&P is $100. When you get the green light to trade your second contract, now those same 2 points are worth $200. At 3 contracts, $300. At 5 contracts, $500. Okay? You're building a business, and you have a teacher, and you have a mentor. It's everything a trader needs, all under one roof, at one low price. We knew the 62% reverse fib was going to give us an issue. That's how fibs work. So we're well off the high of the day. Very possible, going into the close, we make a run at the high of the day. We're going to go to the 30-minute chart here in just a minute so you can get an up-close look. Again, we want to see where institutional money is going, where their goal is, where the major obstacles are. Like we knew when we hit this 50% reverse fib, that was going to be a tough area. And look how many trading sessions it took to get through it. And then a economic report sent us up to that 62% fib, where we spiked it just a little bit, and then we got rejected. Okay? If buyers remain committed, it can push us higher at this swing high, right here. If you follow the horizontal line of the cursor, you should anticipate resistance there. At this swing high, you should anticipate resistance there. That's if we overcome the 62% reverse fib. We need to close above it and hold on a pullback before we start looking north and go from reverse fibs to regular fibs. I'll pull these down and I'll draw the fibs from the low to the high like I did on the show yesterday. So if you missed yesterday's show, you can just go to youtube.com/CFRN and watch yesterday's broadcast. Okay, that simple. So here's the daily look. Now the S&P tends to be the bellwether in the E-mini futures markets. What the S&P does, the Dow, the Russell, and the NQ, or in most cases, will follow. There are occasions when one of the indices will lag behind, or others will get out ahead. But the S&P 500, if you understand its movement, you can then use that to trade those other E-mini contracts. All right, let's go to the 30-minute S&P. The numbers I just showed you a few minutes ago, the CTAs, these. Last night's long CTA is 42.26. Once an alert triggers, whether it's a logic alert or a concierge trade alert, there's a greater probability of it triggering multiple times than not triggering multiple times. The vertical line on the screen separates today, Thursday, from yesterday, Wednesday. Back here's Tuesday. So we traded sideways. We triggered 42.26 up to 42.32 and a quarter. That's 6 1/4 points that the market made available. Now, if you're old enough to remember, back when people went to the theater and didn't have the ability to stream movies at home in their living room, if you got there late after the movie started, there was a guy with a flashlight and a funny hat, the usher, he was called, and he would escort you into the darkened theater, shine his flashlight at the floor, and help you find a seat without falling over your own or somebody else's feet. That's what the alerts do. They point out windows of opportunity. In the case of the logic alerts, those are current price action. The CTAs are based on historic price action. Okay? So from 26 to 32, there was a 6-point opportunity. Price gets back below the trigger, pulls back to the BBC. The pullback holds more often than it doesn't on the 30-minute chart and higher. And as you can see, we got rejected. And then we triggered a second time. And that second trigger took us all the way up to 42.60. That's 34 points at $50 a point. $1,700 per contract traded. And we still haven't made it to the final trade to target. On every long alert, the final trade to target is the weekly zone above. On every short, the final trade to target is the weekly zone below, whether it's logic or CTA. We've come back after putting in that high, a $1,700 per contract move. You're never going to get out at the exact swing high or the exact swing low because you don't know it's the swing high or swing low till when? After the fact. Okay? But what we do know is that once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. So we get back below the trigger, we trigger again, and we're up to 42.35. 9 points, $50 a point, $450 per contract traded. Now the step line is directly above price, so that could serve as good resistance. If we overcome the step line, Then we have a little window of opportunity up to red and falling. Okay. Yesterday's big rally, you'll notice as we approach the weekly trading zone, when we approach it from below, we expect it to be resistance. And it was. We finally got through the zone, which is 41.96/97, and then price reversed right back to the zone where it became support. Resistance, 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 support, support. And then we get a leg, retracement to the BBC. Just remember the pullback holds more often than it doesn't, like it did here and like it's doing here. Okay. We're printing a green candle. Resistance, potential resistance, it's right at the top of this candle. And then you've got resistance here, and then again here, and then here. The Logic 247 alerts will have multiple targets. I'll show you what I mean. Now, this is a good example. Alert number 11,484 was to be long at 42.26 with an initial target at 42.28. Potential resistance at 42.40. And then the weekly trading zone up at 42.75/76. The red X means it was stopped out. Go figure. And then we come back and we do this. Okay? But these numbers are all important to keep in mind, however the recap turns out. Okay? Here on the Russell. B is buy, 1978. Initial target, 1980. Potential resistance at 88. So you've got like one target, two target, final trade, two target. Okay? Multiple targets. All right. We're at that area where we anticipate resistance. We've got to get through it before we consider long positions. In fact, we've already come off the high of this 30-minute candle. It's got 2 minutes left in it. If we start printing a green candle, then we got a window of opportunity from 42.37 up to about 42.40, where we again will encounter potential resistance. If we're able to get through that, high is here. The Dow, 33,380. Traded up to 33,427. It's 47 points, $5 a point. Price pulls back to the BBC. Pullback holds more often than not. We trigger again and trade right up to the target at 33,435. That's 55 points at $5 a point. Then we pulled back to the BBC. The pullback so far is held. In fact, when price pulls back like this to a weekly trading zone, we expect that to be support. When price pulls back to the BBC, we expect that to be support. Price always reverts to the mean. And so this was support times 2. Looming overhead is red and falling. Potential resistance, if we can overcome that, then these two swing highs represent potential resistance. So if you're in a long trade from, say, here to here, you got to tighten your stop, take your profit, because until proven otherwise, this is going to be good resistance. on the Russell. 1978 was the trigger. Looks like I forgot to put the vertical line on here. There we go. Where that line is, that was yesterday's. That was the Wednesday closing 30-minute candle. This candle right here is the opening of the Thursday session last night at 6 p.m. Eastern. We traded up. We got through red and sideways. We triggered at 78, and the market took us up to 80.20. We then pull back to the BVC. We trigger again, which takes us all the way up to the target at 1994. $94 minus 78, that's 16 points, $50 a point, $800 per contract traded. From the published entry to the published target, and as you can see, we overshot the target. And that really does look like the high of the session there. In order for price to take out that high, it's got to overcome this zone again, and it's got to overcome red and falling. On the NQ, again, multiple triggers. Here's where the market opened. We trigger 465 up to 482. 65 to 85 would be 20, so 17 points at $50 a point. $850 per contract traded. No, I'm sorry. Believe that. What was the swing high? 482. 482 minus 465. Still 17 points at $20 a point. It's $340 per contract traded. Then we pull back to the BVC. The pullback holds. Red and falling turns to blue and climbing. So all systems go for a long trade. The first move up took us to 486. $20 a point. Then we get back below the trigger. Make another run up to 510. And we get back below the trigger. And we make another run up to, 520. Okay. Now we've gone from zone to zone, back to the zone. But price is now below the BVC on the NQ. Remember when I gave you the numbers from around the world at the beginning of the show, the NQ was the only major index in the red. And now we're below the BVC. And the window of opportunity is right here. Now, if price trades through that low, then it'll take you down to the zone, which is 360/361. On crude oil, 91.90 was the trigger. Now, the 30-minute chart is your roadmap. You've got to have a smaller time frame. Whether you choose the 5-minute, a tick chart, a range chart, whatever it is, you want to see the setup that you learn in the live training room every day. Bullish cross, price pulls away, price pulls back to the BBC. up close, you go long. Okay. So this is the area where you want to go long. We get rejected, rejected, rejected. We finally trade through it, 91.90 up to 92.16. It's $360 per contract traded. Then we get back below the trigger, trade, and you see the pull back to the BBC hill, and it took us right up to the trade to target, which was 92.30. That's $400 per contract traded. The market continued to climb, pull back to the BBC and the weekly zone, and we've now put in a high on the session up at 94.90. When the price of crude oil moves $1 from $91 to $92, that's worth $1,000 per contract traded. Obviously no trigger on the short side. On gold, no trigger on the short side. We had a trigger from 1813 that ran up $170 per contract traded. We got back below the trigger, up again to 1814.90. That's $190 per contract traded. And now we're just consolidating at the weekly trading zone. Only three things happen at a weekly zone. The thing you're going to see 70-75% of the time is consolidation. That's the most likely. The second most likely is rejection. That's when the 30-minute candle closes and the only thing left touching the zone, which as price moves up, we expect that to be resistance, just as when price moves down, we expect it to be support. When this candle closes, the only thing left touching the zone is the wick. You're going to see that about 20-25% of the time. Most likely, consolidation. Second most likely, rejection. Third and least likely is the slice, like this candle right here. Slice through the zone like it wasn't even there. Price retraced back to the zone it sliced through and is now continuing in the direction of the slice. Those are the three things that can happen at a weekly zone. The zones are published Monday morning, 6:15 a.m. Eastern, for all of our members and everyone on the free trial. As you can see here, as price came down, it found support at the zone, it found resistance at the zone, it found support at the zone. It finally managed to break below the zone. But if we look left, we'll see the reason why price stopped here. Okay. We got almost to the short CTA. Important prices, important areas are almost always tested. And we were rejected before we even touched the short at 98. Silver. This is where the market opened. We pull up to the BBC, the pullback holds, down we go. And the first trigger takes us down to 2041. That's 8 pennies. 2 pennies is $100, so that's a $400 per contract move. And then we get back above the trigger, down we come again, back above the trigger, down we come again, back above the trigger, down we come again, back above the trigger, and down we come again, all the way to the trade to target at 2023. $1,300 per contract traded from the trigger to the target. We're below the BBC. We've got red and falling. At this point, we should anticipate lower prices until we get to this support area. We expect that to be support until proven otherwise. Like this candle here, this red candle spiked it, but when the 30-minute candle closed, it was back above the zone, or at the zone. The zone's actually 2023/24. And on the euro, we had a little bit of a trigger on the short side, 30.85. we dropped to 3,005. That's roughly $125 per contract traded. And then we trigger long, and it takes us all the way up to, here's yesterday's high. Shows that there's weakness in the market because we're unable to take out that high. Okay, got a high and a lower high. If we get a lower low, if we take out this low, now we've gone from an uptrend to a downtrend. Okay. When the euro goes from 3,200 to 3,300, that's $125 per contract traded. So from 450 to 550 to 650 to 750 to 850. Each one of those moves $125 per contract traded. Back to the daily chart. 62% reverse fib, still our resistance. High of the day is resistance. Low of the day is support, sitting right on top of blue and climbing, and right below that is the step line. Okay. How we close today, if institutional buyers come in as we approach the end of the Wall Street session and close us above. Now, futures continue to trade an hour after Wall Street closes. Wall Street will close at 4 p.m. Eastern, so the trading of stocks ceases, except for a few select stocks that are traded after hours. But futures continue trading till 5 p.m. Eastern. Then there's an hour break, and then tonight at 6 p.m. Eastern, that will become the beginning of the Friday session. If we can close this session above the 62% reverse fib, that's bullish. If we close below it, that's bearish. Okay, but we are well above the VVC. Now, price always reverts to the mean. Okay, and so whether it happens today, tomorrow, or next week, price will revert to the mean, which means we've got to move to the downside in our path. Whether the pullback holds or not, you see the pullback held, and the pullback held, and the pullback held. This time we got through, but each time we came down, the pullback held, and the pullback held, until it didn't hold. We know that eventually it won't hold, okay? But it's going to hold more often than it doesn't. That should be your important takeaway. All right. You already know how to get your passport. It is lifetime access to everything we do, everything we've ever done, and whatever we do in the future. There's no upsells. There's no gotchas. There's no new discoveries where you have to break out your credit card again. Lifetime doesn't always mean the same to every person. Webster defines lifetime, and Webster defines unlimited. We go with the historic definition. When we say lifetime access, we actually mean lifetime. When we say unlimited one-on-one mentoring, we really do mean unlimited. Unlike your cell plan that has a bandwidth cap, once you reach so many gigs of data, they throttle your data, or some plans now even just shut you down. We really mean unlimited. When you get 2 hours of live training every day, where you're encouraged to ask as many questions as you can, but if there's something you still can't quite get a handle on, all you got to do is request a mentoring session. It's really that simple. Trading's not easy, but it can be that simple. Let's go to our good word for the day and wrap up today's broadcast. Keep trusting God. He will intervene. Proverbs 21:20. There is a desirable treasure and oil in the dwelling of the wise. God's word says you're to do two things with your money. Number one, sow some. The Bible says whoever sows generously will also reap generously. 2 Corinthians 9:6. People used to come to me all the time and say, should I tithe on my gross income or my net income? Well, my answer was always the same. Do you want a gross blessing or a net blessing? It's up to you. Typically, people will say, things are a bit tight for me right now. Don't withhold because you're afraid of not having enough. See, this is where faith comes in. Give God a seed to work with, and He will make sure you have a harvest when you need it. His ability to provide is not limited by the world's economy. Do what Isaac did. There was a famine in the land, then Isaac sowed in that land and reaped in the same year 100-fold, and the Lord blessed him. Genesis 26:1. Who blessed Isaac financially? God. When God tells you to give, do it in faith, confident that at the right time, in the right way, and in exactly the right places, you will receive. You say, I've never tried that. Well, give it a go. Number two, save some. Sow some, save some. Proverbs 21:20. There is a desirable treasure and oil in the dwelling of the wise, but a foolish man squanders it. Learn to live within your means. We have become a debtor nation because we fail to live within our means. Remind yourself that you can live happily without most of the stuff advertised on television. There's nothing wrong with owning a Rolex as long as the Rolex doesn't own you. Nothing wrong with driving a Lambo or owning a Lambo as long as the Lambo doesn't own you. I hope you see the difference in the two. Before you make a purchase, stop and pray. Just because the bank approves the loan doesn't mean God approves the expenditure. Joseph in Genesis 41:35 instructed Pharaoh, gather all the food of those good years that are coming. Then that food shall be as a reserve for 7 years of famine. If we live by the Joseph principle and save. And one more thought, there are consequences for how we spend our money. We should always try to be good stewards of everything God has given us. And remember, everything belongs to Him. Anything that you have, from the food in your refrigerator to the gas in your tank, to whatever money you might trust with a bank, you're only a steward of that blessing. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.